Hello everyone, welcome back to the channel. Are you struggling with a QuickBooks reconciliation discrepancy where your QuickBooks balance doesn't match your bank statement? This issue can be frustrating because even a small difference can prevent you from completing your reconciliation successfully. Don't worry, in this video I'll explain what causes reconciliation discrepancies in QuickBooks and walk you through the exact steps to identify and fix them. So stay with me till the end. QuickBooks reconciliation discrepancy occurs when the ending balance in QuickBooks does not match the ending balance on your bank statement during reconciliation. Ideally, the difference between these two records should be $0. When the balances don't match, QuickBooks indicates a discrepancy that must be resolved before reconciliation can be completed. This issue can occur in both QuickBooks Desktop and QuickBooks Online. Common causes include incorrect opening balances, edited or deleted reconciled transactions, duplicate entries, missing transactions, or adjustments made after reconciliation. Let's start by understanding what usually causes the problem. One of the most common reasons is entering an incorrect ending balance during reconciliation. Another frequent cause is modifying or deleting a transaction that was already reconciled. Missing transactions, duplicate entries, or journal entry adjustments can also create differences between your QuickBooks records and your bank statement. Now let's go through the recommended steps to find and fix the discrepancy. The first step is to verify your opening and beginning balances. Compare the beginning balance shown in QuickBooks with the beginning balance on your bank statement. If these balances don't match, the discrepancy may actually originate from a previous reconciliation period. Next, run the reconciliation discrepancy report. In QuickBooks Desktop, go to Reports, then Banking, and select Reconciliation Discrepancy Report. Choose the account you're reconciling and review the report carefully. This report helps identify transactions that were changed after they were previously reconciled. If you find edited transactions, determine why the changes were made and correct them if necessary. Another useful report is the Missing Checks report. Go to Reports, select Banking, and choose Missing Checks. This report helps identify missing transactions that may not have been properly recorded. Compare the report with your bank statement and ensure every check or transaction appears correctly in QuickBooks. You should also run a transaction detail report. Go to Reports, select Custom Reports, and choose Transaction Detail. Set the appropriate date range and account filters. This report helps identify transactions that were modified, added, or deleted after reconciliation. Carefully compare these transactions against your bank statement. If you discover transactions that were incorrectly modified, restore the original information whenever possible. Now let's talk about reconciliation adjustments. Many users create adjustment entries simply to force the balances to match. While this may temporarily remove the discrepancy, it's not always the correct solution. To review adjustments, open the chart of accounts and locate the Reconciliation Discrepancies account. Review any adjustment entries made during recent reconciliations. If an adjustment appears unnecessary or incorrect, investigate it thoroughly before making additional changes. Once you've corrected any discrepancies, rerun the reconciliation process and verify that the difference is now 0. If you still cannot identify the issue, you may need to undo previous reconciliations until you reach a period where the opening balance is correct. In situations where old transactions were modified years ago, multiple reconciliations may need to be reviewed and corrected. The key is to identify the root cause rather than simply forcing balances to match through adjustments. By following these reports and verification steps carefully, most users can successfully resolve QuickBooks reconciliation discrepancy issues and maintain accurate financial records.